This is Matthew Cratter from Trader University, and today I want to talk about how to buy call options on Bitcoin. I've been getting this question a lot, how to leverage up a trade, and if Bitcoin does well, how to make a lot more money with less capital. If you're interested in learning how to make money in both bull and bear markets, whether with stocks, momentum stocks, or Bitcoin, or you just want to see what I'm trading or investing in, be sure to hit that subscribe button. So I'm going to begin with a brief overview of how options work. If you want a little bit more of an in-depth approach, I'll link to this video below. This is a video on trading call options that I did a couple months ago. But the basic idea is this. A call option gives you the right to buy a stock or buy a commodity or buy a digital asset like Bitcoin at a strike price. So there's always a strike price involved. And we're going to be looking at the $15,000 strike price, which is a little bit what we call out of the money. Right now, Bitcoin, as I'm recording this, is trading at 11,500. So this would be really the next strike price up, as we will see. So a call option gives you the right to buy some Bitcoin at $15,000 in exchange for a premium. And you have this right over a certain period of time until the option expires, which is called options expiration. And so let's see why this might work. Well, if you have the right to buy Bitcoin at $15,000, that would be the price that you'd be allowed to buy Bitcoin. And let's say Bitcoin is trading at $100,000 by the end of 2021. That's my target for it. That's Plan B's target. You can check out my other YouTube videos if you want to learn a little bit more about that. Well, let's see what happens. If we have the right to buy Bitcoin at $15,000 and Bitcoin is trading at $100,000, well, that call option, if there's no time value left on it, should be worth at least $85,000, because what I can do is I can exercise that call option. I can buy Bitcoin at $15,000 per Bitcoin, and I can immediately flip it or sell it for $100,000 in the open market. I can move it to Kraken or Gemini or Coinbase or something like that. So what this means is that if you buy a call option at $15,000 and Bitcoin goes to $100,000, that call option should be worth at least $85,000. I'm just taking the difference between $100,000 and $15,000. So that's the general way that call options work. And the deeper out of the money you buy them, in other words, the higher the strike price, we're also going to look at the $50,000 strike price, the more leverage you get, but also the more risk you're taking, because there is a chance that Bitcoin never goes above $15,000, in which case you would lose 100% of the money that you invested in the call option. So that's something very important to realize. And if you watch this video on call options, you'll get a better understanding of how that works. So I'm going to be using a platform called LedgerX, LedgerX.com. I'll just link to it below. I'm not affiliated in any way. I've opened up an account with them, which I haven't funded yet. I actually haven't done this trade, and I'm still debating whether to do it. I do own a lot of Bitcoin. I prefer to own Bitcoin, but for those with maybe less capital who really want to leverage things up, options may be a choice, as long as you understand that when you're buying call options, you can lose 100% of the money that you put into them. So basically, if you open up an account with LedgerX, and you can do it with no money, I just opened this up with an email address. Basically, right now they offer, you can buy and sell Bitcoin itself. You can buy and sell puts and calls, which are different kinds of options on Bitcoin. We're just going to be talking about the call options, which are available right over here. We can see that they're different expirations. We're going to be looking at the call options that expire on December 31st, 2021. So about more than a little less than a year and a half out. And if you scroll up and down, here, you can see the different expirations. So for example, they do have some options that are expiring actually today, August 7th. They've got some that are expiring in 21 days from now, etc. But we're going to be looking at the most distant call options. These are the equivalent of leaps, sort of long expiration call options. And basically, we can see the strike price in the middle here. So here's the expiration, December 2021. And they currently offer strike prices of $10,000, $15,000, $25,000, and $50,000. As I said, we're currently trading roughly at $11,500. It looks like they have a very wide bid-ask spread here. You don't want to trade Bitcoin on it itself, but for call options, this is one of the few ways that I've found to do it. Now, we can see as well that there's a bid price for each call option and an ask price or an offer price. If you're going to be buying this, the really fast way to get in is just to put in your limit order price at the price of the ask. Or you can also put it in an order that's somewhere between these two. So if I wanted to buy the $15,000 strike call options, I might try to put it in order that's right at the midpoint right here, some halfway between 43.45 and 43.95. So let's just talk about the $15,000, the 15,000 strikes to begin with. I think if you just click on here, let's see. Yeah, if I just click on that, it populates everything over here. Now, the first thing to realize is that these are minis. These are mini call options. And so if you want the equivalent of 1 Bitcoin, you'll need to do 100 of these. We can see right here that when I type in 100 there, this is equivalent of 1 Bitcoin. Now, the premium is just going to be, we can put in our price here, as we said, we can use the midpoint. This is just taking the offer price. If you want to get filled immediately, you can use this price. In the scheme of things, this $50 is not going to make a big difference, but you can experiment around with this. And so to buy 100 call options, 100 of the 15,000 strike call options expiring December 2021, it will cost us $4,395 for this 100 options, 100 call options, which is the equivalent to the underlying of 1 Bitcoin. And we can see that I think I'll link to the fees. It looks like they charge 10 cents fee per contract. So I'm going to just ignore commissions for the perspective of all my calculations because they're not super significant. But that's definitely something to keep in mind when you are calculating what you're going to do. So if you don't have a lot of capital, you could do as little as 1 call option. 1 call option, as we can see here, will cost, it's equivalent to 1/100th of a Bitcoin. It will cost $43.95 plus, I guess, another 10 cents for commission. And that will do we're talking about the 15,000 strike. You would just click buy right here and you would be all set to go. Now let's talk about how the payoff would look for this. Actually, before I do that, I want to draw your attention to the implied volatility. Those of you who trade options know a lot about implied volatility. It gives you an idea of how risky or how volatile the underlying option is, the underlying security or digital asset is, or how volatile it's expected to be. This is the volatility that's implied by the option pricing over the period before expiration. Just to give you an idea, 99% IV or implied volatility is quite high. This is where a stock like Tesla would trade before earnings. Normally Tesla trades maybe around 60 or 70% implied vol. So this is, as we would expect, very high vol. These options are quote unquote expensive simply because the underlying moves around a lot. And if we look at the premium as a percentage of the underlying, we can see that 43.95 divided by 15,000, this is a very expensive option. Normally the premium will be a much smaller percentage of the strike price. But let's just look at different payoffs for this. So for this, the purposes of this, we're going to first start off by assuming we buy 100 of the 15,000 strike calls. We're going to pay $4,395 before expiration. And then we're going to assume a really good case scenario here. We're going to assume that Bitcoin gets to $100,000 right at expiration, right before expiration. Now, if that happens, these calls, as we said, will just be worth $100,000 minus the strike price, or $85,000 per call. So we invest or speculate with $4,395. The payoff is $85,000. So you can see in a little less than a year and a half, it's a way to make 19 times on your money. Again, a very risky trade. You can also lose all $4,395. The good news, unlike futures, you can't lose more than the premium you buy here. So your max loss is $43.95. Your max profit is basically unlimited. If Bitcoin goes to $200,000, then these will be worth $185,000. So the small version of this, as we said, we could just buy 1 call for $43.95. And if Bitcoin goes to $100,000, these call options will be worth at least $850. If there's more time till expiration, they'll also have a time value attached to the premium, so they'll be worth a little bit more. But I'm sort of looking at the extreme case. These can obviously move around a lot as you are holding them, but as you get close to expiration, you will approach what's called the intrinsic value of the option, which is just the price of the underlying minus the strike price. So whether you use $43.95, you spend a little more than $4,000 on this, or you just spend $43 on it, either way you make 19x on your money. That would be one of the best scenarios. Obviously, if Bitcoin goes to $1 million, then you're going to be making much more than this. And then the worst that can happen is you lose your whole premium, whether it's $43.95, $4,395, or $44. Now, the nice thing about these options is that you can actually convert them into Bitcoin. These are what are called European-style options. And I'll link to this page as well. European means that they cannot be exercised before expiration. Now, if you're long call options, there's no risk of what's called assignment. You are in charge, so it's not something you really have to worry about. But the thing I want to draw your attention to right now is that these are physically settled Bitcoin options, which means if you are long a call option, you can accept delivery in real Bitcoin. You have to provide them with instructions by the long holder. That would be you if you buy call options. If you are long call options, you have to do it before settlement. They won't do it for you automatically, etc. Now, the other thing you can do is you can just trade out of it. You can just sell your call option and take your profits in US dollars. And so as you approach expiration, the call options will be trading around $85,000 or $850 for one call option. And you can just basically take profits, and you'll end up with $850 minus commissions, minus 10 cents an option in your account. So this is a nice way to get Bitcoin if you want to just take your profits in Bitcoin. Of course, you have to pay your taxes, probably in US dollars if you're a US citizen. But you can actually exercise your call option close to expiration and get your hands on some Bitcoin, or you can just trade out of the call option at any time. You don't even have to wait till expiration. You can sell your call option at any time, take your profits. So in this case, your profits would be $850, not counting commissions, minus the price you paid, $43.95. That would be your profits. You have to net out commissions. Obviously, you need to pay taxes on that as well. This is a regulated exchange. They're regulated by the CFTC, which is sort of the group that regulates futures in the U.S. This is a very legitimate group. It appears to me. So that would be buying the 15,000 strike options. Again, these right here, they're just the next expiration, the next strike price up, from where Bitcoin is trading right now, 11,400, 11,500, somewhere around there. Next, we're going to look at what are really called deep out of the money options. We're going to look at the 50,000 strike, and we'll just click on here. We can see it's got a similar implied volatility of 99% or 0.99. It's got a delta. These are basically the 25 delta options, if that means something to you. That's really considered an out of the money call option. The delta is 0.26, essentially 0.25. And we can see that it makes sense. These are cheaper. They're currently trading. There's a very wide bid-ask spread. They're bid at $13.50. They're offered at $15.89. And so if we wanted to trade these, we'll just click right here. Let's say we do 100 of them. That will cost us $1,589. Again, if you just do one of them, it will cost you $15.89 plus 10 cents commission. So these options have a very high probability of expiring worthless, depending on what you think Bitcoin is going to do. If we use basic option pricing, one way of interpreting the delta is as a probability of expiring in the money. So these are telling you there's only a 26% chance that Bitcoin is at 50,000 or a little more than 50,000 by expiration or at expiration. So that gives you an idea of what the market's pricing in. I think there's close to 100% chance that Bitcoin will be at 50,000 at this point. And so that's a mispricing that we can exploit. Again, you have to be very bullish on Bitcoin to think it's going to go from 11,500 to 50,000 over the next, call it 15 months. We are entering the most bullish period, the most bullish part of the 4-year cycle for Bitcoin. We just had the May 2020 halving, and we're slowly trending up here. A lot of buying pressure, a lot of excitement around Bitcoin. And again, we have Plan B's models, which are calling for Bitcoin above 100,000 by December 2021. Actually at or above 288,000 if you use another of his models, which I will link to. I will link to below. But let's just look at the payoff here. We just looked at the payoff for a 15,000 strike option. Let's look at the payoff for a 50,000 strike option. Basically, you can buy those. You can buy 100 calls right now with a 50,000 strike. Same expiration, December 31st, 2021. You can buy these 100 calls for $1,589 plus 10 cents per contract. So plus 10 cents, 0.1 times 100. So I guess $10, be $10 commission. I don't know if I can do math this afternoon. If Bitcoin is at 100,000 at expiration, these calls will be worth just the price of Bitcoin minus that $50,000. So they'll be worth $50,000 a piece. And you basically will have turned $1,589 into $50,000, not counting commissions, but commissions are fairly small. In other words, you made 31 times on your money. Now, this is quite respectable. It's very difficult to turn $1,589 into $50,000 using anything. Again, you should be aware when you're buying, especially deep out of the money calls like this, that there's a chance, probably good chance, that you lose 100% of your investment. So you have to have very high conviction in Bitcoin to do this trade. Now, we could also do the 1/100th version of this, where we just buy one call option for $15.89. It should be worth $500 close to expiration. Obviously, it can trade above this, but during expiration, during the time before the option expires. But if we look right before expiration or at expiration, when there's no time value left, these will be trading at $50,000 for 100 calls or $500 for one call. Just like with the $15,000 calls, you can exercise your call option at expiration, and you can get those Bitcoin delivered to you. In this case, if you buy one call, you'll get 1/100th of a Bitcoin delivered to you. If you buy 100 calls, you get a full Bitcoin delivered to you. That will be worth $100,000 at that point, if that's what we're assuming. Or you can just trade out of your call option at any time. Again, you don't have to wait until expiration. You could buy it at $15.89. Now, the problem with a wide bid-ask spread is if you try to get out of it right away, if we buy it at $15.89 and immediately sell it, we're going to have to probably sell close to the bid price. And so we'll automatically lose, call it $230, $240. And so this is why I think it makes more sense to do this as a long-term hold. Again, none of this is investment advice. I own Bitcoin. I don't own the options themselves yet, though I'm certainly thinking about it. But these are the kind of big multiples, especially if you have a small account and you're really willing to risk it. You're willing to risk whatever you put into premium. These can be a great way of really moving you into the much bigger time. If you're trading a $2,000 account, all of a sudden you're at a $50,000 account. You've really made a lot of progress, though you do have to pay, obviously you have to pay taxes on that. As we said, these are European style options. You can sell calls, you can sell puts, etc. It's a little bit more advanced, less straightforward. I'll also link to this page where it tells you exactly how to buy call options using LedgerX, and I'll link to this page that has the trading fees. Now, if you found this video helpful and you'd really like to learn all the ins and outs of trading options, check out my paid courses on my website, which I'll link to below, especially these two courses, Learn to Trade Options Like a Pro and Swing Trading with Options. If you work through both of these courses, you will know just a tremendous amount about options, and you'll have a real feel for them. In these two courses, I mainly cover just stock options or equity options, but the principles are the same. You'll be able to apply them to commodity options or to Bitcoin options. And I will be adding more lectures that cover those two topics. But if you know nothing about options, this is a great place to start. And the good news is if you join Trader University Premium, you will get unlimited access to all these courses. So my day trading course, Learn to Trade Stocks Like a Pro, you'll get a list of the momentum stocks that I'm trading, how to make money with IPOs, just a ton of courses, 13 courses here, covered calls, Learn to Trade Futures, dividend stocks, etc., including my real estate investing course as well. So you can get access to all of this. If you click on that description, that link in the description notes below, it'll take you to this page. And then you can click into any of these individual courses and you'll see the list of lectures and what is covered in the course. And if this is something that interests you, you can scroll all the way down, click Get It Now, and that'll take you to the checkout page. Now, normally 30 days access is just $125, gives you access to everything on the website, all 13 courses. But because we're still in a recession, times are still hard, I wanted to give you a coupon as one of my YouTube subscribers. So if you just scroll down here and click Have a Coupon Code, and you type in YT99, you click Update, that's going to take $26 off. So instead of paying $125, it'll just be $99 for 30 days access. No long-term contracts or anything like that. So you can sign up, watch all the courses, especially watch those 2 options courses, take notes, and then cancel, and you won't be charged again. I will be adding new courses in the coming months as well. I'm especially excited about a momentum stocks trading course that I've been slowly working on. So if this is something that interests you, you've got some time at home and you really want to drill down and become a better trader, I would encourage you to check out all of my paid courses. If you found this video helpful, be sure to hit that subscribe and like button, hit the notification bell so you'll see when a new video of mine is posted on YouTube, and let me know your questions and comments in the comment section below. I know when you're first starting to trade options, it can be very, very, very complicated, and it's sometimes hard to wrap your mind around, but I would encourage you to give yourself permission to learn this very slowly. Watch the free video on YouTube about trading call options. And it probably took me 12, 15 months before I could really understand options 20, 25 years ago when I first started studying them. They just seemed very weird. So give yourself permission to learn slowly, and just know that if you keep studying them, you'll begin to get a real feel for how call and put options work, as well as many of the more complex strategies that use options that I discuss in my courses. Thanks a lot for listening, and I'll see you in the next video.